Hello everyone, it's Red with RedDragonLeo.com. Today is Sunday the 15th, about noon here Eastern Standard Time as I'm doing this video. We got several things here I'd like to go over and throw you a couple different possibilities as to what I expect next week. There is some bullish patterns that are developing, and for the most part, though, I see bearishness, but I want to be open-minded here and try to see both sides. So when I look at this chart, one of the things I notice is that we are in a triangle. If you draw a line right through here, draw a line right down through here. This is a bullish continuation pattern. It happened before in the past and actually broke down. It happened here. So actually you draw the line here to this tip to this tip, so it's actually a triangle, okay, like this, and it's generally a continuation move of what it if you're going up, then it's continuation up. You're going down, it's continuation down. In this case, we have been going up since the 1250 low, or even further back here. So you go up in wave 1, down in wave 2, up in maybe a wave 3, this sideways consolidation triangle in wave 4, and then maybe a wave 5. Now that's an Elliott wave terminology. Now, you know, I don't really follow Elliott wave, but I like to use it after the fact because it does give you some possibilities as to what's going to happen. This could also be an A, B, C, and we could be starting down a new wave at this point right now. And that could have been the top right here. So I don't really know how to label these until it's over with. But I want to look at other things because technical analysis does seem to be a little bit more accurate in this form. Over here there was a triangle as well. You draw a line up here, this low, this low, this low, and then down here as well. You would have thought that that would have been a continuation pattern, but in fact it broke down. Okay, now here on the other one, here was a triangle. Draw a line here, draw a line here as well, and you can see that it broke up. In this case, continuation pattern. Now let's look at the differences down here in the MACD, the histogram bars, full stochastics, slow stochastics, as well as the RSI up here. When we look at it here, for this one here, to determine where we were going to go, as you can see, the RSI was overbought and it fell down and traded sideways right around this 50 level. What have we done here? Well, we never quite made it up to overbought condition. We just fell down again right around this 50 level. What about here? In this case, we did the same thing. We were up here, we fell down around this 50 level, and we finally broke down. This one here, we broke up. So which one is it going to be this time? Down here, when we fell down and hit this low and did this chop right here, it formed this triangle, we went quite far negative down here. We went well below -5. We went very deep. We also went all the way down here almost to 20, then back up, then back down. This should have been a sign to you right here as it goes up and back down. And that should have been a sign at that point that it was bottoming out. It was trying to make its way back up. In this case, it held the line and then did rally up. And you could have also looked here and you would have noticed 1, 2, 3. You could draw a line through there and see that would have been positive divergence as this was bottoming out. We don't have that here. We don't have any positive divergence. Okay, we're just still going down. Here we're still going down. We have not made the first attempt back up yet. Also here on the slow stochastics over here on this one, when it rallied, it did try to go up, then it fell and went back down. Here we tried to go up, but it was at a much higher level. As you can see, we're up here in the 65 range right here when it did this. Here we were down here in the 30 range when we tried to roll back up for the first attempt. So it tried to roll up here, but it was too weak. That kind of gives you the inclination that we should go further down deeper and then try to roll back up again. Also looking here at the again the full stochastics, there is no sign of it turning up here. There's one attempt to curl back up here, but again at this point, look at the difference. You were up here at a high rolling over, and when you got down here, that's when it tried to roll back up. So it came from a very high position here on the histogram bars. Over here, when it rolled down, it came from a histogram tower that wasn't as high. It went down quite deep before it finally rolled back over. This one seems to be, it came from a little bit stronger position. Over here, it was actually a little bit weaker. And if you actually look at it from this standpoint, and it sold off and then put into positive divergence, and that was kind of your clue. We have not got any positive divergence here. Now, that does not mean that the market is going to continue selling off, because if you look here, this market did not continue selling off. It set a base right here as it put in this 1, 2, 3 higher lows right on the histogram bar. It put in that low, and that low, and basically just stayed right there until it finally got some juice and bounced back up. Okay, so that would indicate that you could probably play, you'd have the best odds on the short side here to see what happens as this thing goes down and tries to make a rally back up, then rolls back down again, and then finally makes a rally back up. So here we want to see this come down here and put in some type of positive divergence as it tries to roll back up. Now it could sit here and do this chop sideways up and down for the next week or two as it finally tries to curl back up and put in a positive divergence like this. But I don't think it's going to do that. I think it's going to break some major support lines. And the reason for it is where it's at. It is up against some heavy resistance. If we look over here on the weekly, you can actually draw a line right from here to here to here, all this right here, and there's a very, very important trend line right here that I think it could break and come back down to a different trend line. If you draw a line from this low to this low and this low and draw it on up to here, as you could see, it could easily intersect about with that 200-day moving average. Now, I don't know if it's going to come down that low or not, but over the next week or two, it could certainly come down and break this important rising trend line right here. Because there's the overhead resistance right here, as well as, because we have not officially broken out on a weekly chart. This line from here to connected to this high, connected to this high, and connected to right here is still intact because you only had 1 week that closed above it, the next week closed below it. You have to have 2 candles on any time frame to do confirmation saying that you officially broke out, whether it's on the daily or on the weekly. So on the weekly chart, you did not officially break out of this overhead resistance. You had 1 week, you closed up, the next week you closed down below it. So you're still, this overhead line of resistance is still here. So you've got resistance here, and you got a major trend line right here. So you've got a lot of things that would indicate that this thing needs to break down first, and then if it wants to make a run back later, as quantitative easing 3 comes in later in June or August or July, who knows what's going to happen at that point, then possibility we could run up to the fake print of 1388 approximately on the SPX, which is the actual fake print again is the 138.86, which I've showed many times on the SPY. So we know that that's going to be a final high, at least. We don't know it's going to be a final high. We do know that it's going to be hit at some point this year. I suspect later. So I would venture to say that the odds are very, very strong that we will have a breakdown next week, breaking this trend, and put in some type of low over the next few weeks before we finally resume back upward. Probably sometime in June, you'll probably have Bernanke come out and say, yeah, we're going to do quantitative easing 3 or 2.5 or whatever. That'll be the money to rally the market. But for the month of May, it's looking bearish. And so we have to go with the odds. So while you had a breakout here on this sideways on this triangle and a breakout to the upside, you were already pretty oversold, and you had 3 higher lows on these MACD histograms putting in positive divergence. Here you have no positive divergence. Here as well, you go down, you draw your triangle here, right, with a line right here and a line right here, and you look here and you did not have any positive divergence at this time. So it was about right in this, let's see, about right in here that it was, that it had broken down. You still really didn't, I guess you could say you had a little bit if you count this one right here, but not really a lot. I couldn't really say it was a good steady uptrend. You can see here it was down, and you draw a line here, and this low is slightly higher than this one. This is the deeper one, so you were kind of still going down at that point. And here you were starting to put in a positive divergence, I believe, but I don't think it was that strong of one, especially when you look at it right here, as it was still rolling, it's appearing to roll over at this point. So this one's a tough one, a tough call, certainly. So it's kind of debatable on exactly how you look at it right here, but you can look at it like this. It was going up here. At the same time here, it was going down on the slow stochastic. So that's something to consider as well. Whereas this pattern here matched. The full stochastics and the slow stochastics actually matched. You can look at them and you can see that they actually matched. That indicated it was more valid, that when you did come down here on this one, put in this final low right here, this pattern was matching it, putting in a low. That indicates that you were getting close to a bottom. Whereas here, it did not. You had the full stochastics running up, but the slow stochastics was telling the real story, saying that there's still more downside to come as it was going down. If you understand what I'm saying right there. So that kind of gives you the idea that this pattern was going to go ahead and break down, because these were going against each other. They weren't really matching up. So here we kind of had not quite similar. We don't have any turn up yet. We're still pointing down here on this one, and we're still pointing down on the slow stochastic. So we still got a bearish cross here and a bearish cross here. There's no signs of this turning back up for next week. So this again leads to the fact that I think we're going to have more downside to come next week. Everything is pointing to it. The only thing that you could say that would be bullish is that this is a continuation pattern, this triangle. But you have to look at all the factors. Let's go over here and look at the weekly on this as well. Back here when we had this, let's see, where was it here on the weekly, if we can figure this out. Again, this was in late February, and this one was in late November. Okay, so in February, that was this one here. You can see we were rolling over here on the MACD histogram bar. We had put in 1, 2, 3 lower highs, putting in negative divergence there. And here on this one, in this area, for this triangle that we hit in right here, we were not putting in that. Matter of fact, we had just started to roll over at that point, and you really hadn't put in any negative divergence. It was your first attempt at a rollover, as you can see right here. Your first attempt at a rollover. But the more important thing was, look where we were here on the MACDs on the weekly. We were still strongly pointing up, and it did not really even dip at all. We're still strongly pointing up. As you can see, now we have went up quite a ways and actually had a bearish cross on that one there, as it put in 1, 2, 3 lower towers, indicating you did have negative divergence on that particular move. So that was a good sign right there that this one was going to break down. There was also something else here that you can notice right here, and it's the green 200-day moving average. When it's fought so hard to get above this area, and you would think that that it did get support on it. It had one positive close above it, then the next one did not confirm it, the next one did not confirm it, the next one did not confirm it, and they finally were able to go up and rally off of it. So looking at this, I can definitely see the difference here between these, and as this right now does have a bearish confirmation here that this is rolled over here on the weekly, because you got the bearish cross. We are rolling over here as well in the full stochastics. Clearly, this sends a message to me that the odds favor a breakdown on this. I'm not saying that they can't come in and manipulate it, but it showed up in the charts here is what I'm saying. Even though that they manipulated this move here, it showed up in the charts with the attempted move up, then back down, and then move up, and the 1, 2, 3 positive divergence here on the daily, as well as on the weekly, showing again that here it was, that you were resting on the 200-day moving average. So those kind of factors, and the fact it was still pointing up here, that were not the case here. We actually have negative divergence. Draw a line here to here, you have negative divergence. Here you're still pointing up. We don't have that now. So everything to me points to this continuation pattern breaking down. On the 60-minute chart, you can see we did curl back up, and here's that same line. Draw you a line right here, and you can see we could easily go back up to, I don't know, maybe 1350 area right there. Depends on how tight you draw this line. This one never did go up and hit the line, so you're actually drawing from here to here on down to about 1351, 1352, 1353. I think maybe 1353 is probably about the top of the line. As I said in the other video, I thought maybe we would go up and hit that line. We did not hit that line. So this one fell short, so you can't draw the line here. The actual line draws from this point to this point on down, and that puts you about right here. That's about 13. As of Monday, it'll be about 1353. So we could theoretically go up to that point, hit it, then come back down, and then maybe come back down Tuesday and then back up one more time. So it's hard to say what they're going to happen. The Fed's Bernanke speaking again this Wednesday, 2:30 as usual. So the market may chop sideways a little until it figures out what Bernanke's going to say. Close positive that day, and then break this trend line and really tank hard on Thursday and Friday. And that would be my best estimate as to what would happen. Is we're going to have a little bit of a chop until then. Now, if they break out of this pattern firmly, then you're going to look to see is this going to go up here and continue and pass this up, or is it just a failed breakout and will roll back down? I'm leaning towards, if it does break out, it'll be a failed breakout, and that they'll come back down and they'll break this line after Bernanke speaks. So again, here you can see a clearer picture. Draw a line from here to here, and it puts you again about 1353, higher than this one. This one did not make it. So there's going to be a breakout one way or another. Again, 30-minute chart is kind of wanting to point up to it, but it's either going to break down and try to do a back test. So that's a possibility too. It could break down and try to do a back test Monday, and then maybe chop sideways Tuesday, then up again Wednesday. It's hard to say. I'm just thinking that nothing major is going to happen until Wednesday. Here it shows it wants to roll over, so the charts are kind of conflicting for Monday. Monday's supposed to be bullish, but I think I'm just going to sit on my hands until the Bernanke meeting and see what happens, see what he says. If he doesn't say nothing major, then if he doesn't mention QE3 or anything like that, whatever, the market rallies up. I think Wednesday will be the time to go short again, regardless of where it's at. So it might break the trend and come right back up. You look at where it's done it here. It didn't actually do that. It just broke it and sold off and continued off. So it'll be a hard call for Monday, but I definitely think that the odds, even though it's a bullish continuation pattern, a triangle, the odds say that we will break down on this. I've presented those odds to you, and you just have to go with it and see what you think. However, looking further out on other charts here, I think that what we're going to end up happening after we do break down and we finally come back up maybe in July or August, September, October. I think the greatest crash ever is going to come this October 23rd after the next Legatus pilgrimage. You know, right now it's not on here anymore, but the Legatus pilgrimage that we just had, where the gangsters meet again and clear their checks, it was April 30th through May the 2nd, and what did we have? Well, we had it pretty much tanked. We had a crash in silver. Now, the reason for that, I have been informed, I guess, I mean, not me personally, but I have learned, I should say, from Benjamin Fulford and David Wilcox and let's see, who else was I listening to? Anyway, I've had some time to listen to some different audios and stuff about what's going on and what the real deal is. And apparently the reason silver crashed like that was because JP Morgan had basically margin calls at 50. Oh, it was Lindsey Williams that was saying this. At $50, and we fell short of $50, so they crashed silver. They did this on purpose so that JP Morgan didn't go bankrupt, I guess, and have to liquidate everything they had. So they crashed the market in silver, and this was all planned. I think it does have some more downside to go because the market's going to go down some more. Okay, so anyway, that's it for that. This video's getting a little long, so I'll get more into that in maybe the next video for the next post. Alright guys, so I'm just, again, probably sitting on the sidelines until Wednesday after Bernanke sees and see which way the market wants to go. But my odds, my thoughts are odds, statistics, facts say we sell off, we tank. And where to? I don't know, but I'd say 1250 is a good support. We shall see. Good luck, everyone.